Hello and welcome to our usual weekly Streetwise Economics podcast where we talk about money markets. Today, we will be talking about quite a number of things. Firstly, we will share with you what's really going on in the market. The NASDAQ is now in the correction territory and the S&P has been dropping as well. So we will go right into the market and we will talk about tariffs, uncertainty in the market, and a lot of other things. I have my colleague here, Blooming Umorin. I like to call her my trusted money coach. Coach, welcome to the podcast.
Thank you, buddy. Let's get started. The market is red. Let's go for it.
Let's go and see if it will be a good day to shop today. So right now you can see that in the market, it's an ocean of red. You can see a lot of stocks here. Amazon is down 1.8%. Tesla is down 1%, $266.74. That's what it is trading at. And what is very interesting here, you can see that the market is just reversed the trend. It was red when I just, we started recording this. You can see that the NASDAQ is now in the red, and we will discuss more about that. But on the screen, you can see that the NASDAQ is what you can see on the screen, and it actually dropped so far this year. I think it has been almost like 10%. It's seen a 10% drop, which is a correction. But you can see how this has been unfolding, right? That the NASDAQ has been dropping like this. Like this is a downward trend. So we see a reversal here, and we are going to discuss why we think that what's really causing this to happen. Now, let me see the S&P 500 index, which I like to use as my benchmark. You can see now it's back again. That's trading for you. The S&P 500 has been also largely this week on a downward trend. You can see here that it has been dropping, and right now we have a demand zone here at around 5,600 level here. You can see around this level. So, Coach, what can you say about what's going on in the market, and what's your comment?
Yeah, this week has been another volatile week in the market. Again, literally all the major three indices has been in the red. And for those that have some cash on the sideline, this is an
Mm-hmm.
amazing time to just DCA. But whatever has been going on, it's very important to understand the bigger picture.
Yes.
If we look at the 10-year bond rate, it's been going down. And
Yes.
if you are a student of the market, there's an inverse relationship. Like if the bond is going up, then the stock market will be
Yes.
going down. If the stock market is
Yes.
going down, then the bonds will be going up. But in this case, literally both are going down. So
Yes.
either one is not in the correct territory. And I want to believe that is the stock market. The stock market should
Mm-hmm.
technically be going up since we're seeing that the bonds rate are just on a decline, right? But I
Yes.
like to look at this at the big picture. I like to look at the bond market instead because it's telling me a story. What is it telling me? 10-year rate is going down. That is going to feed into mortgage, into credit cards. And I think the non-farm, non-pay,
Fair.
non-payroll farm, oh goodness, non-payroll farm came out today and it was lower than expected. So again, we're saying that the economy is a little bit shaky. That's what the
Yeah.
number is telling us. And this might possibly give Jay Powell the opportunity to cut. I don't know if he's going to cut or not. But all I'm just saying is that this is setting a groundwork for a strong economy, maybe for the H2, meaning that for the Q3 and Q4 of this year. But as a long-term investor, I'm just seeing this as a great buying opportunity. I don't even check my portfolio in terms of, hey, how much have I lost in the market? Because why? I don't need to put myself under any anxiety. So again, I'm just DCAing, and if there's any other way that you can even still generate money in the market by using cover calls, that's what I'm doing. And I just feel like if you're a student of the market and you still believe in the stock market, especially the US stock market, I will be buying, I'll be DCAing aggressively. So NVIDIA went as low as I think 110. Tesla went this morning as low as 252 or 253. The same thing with what's it called? Costco. All of these major great companies, they are just in the red. If you believe in these American companies or just in the stock market generally, you will do well if you want to pick up these quality stocks. But as a disclaimer, we always have to say that these are just two
Yes.
friends talking about what is going on in the market. I wouldn't take this as financial or investment advice. We're just sharing what we're doing personally.
This
And
is
to
for
me,
entertainment purposes.
so yeah, we're just shopping. I mean, stock shopping, and it's just an amazing time to this year if you understand what you're doing.
Yeah, you did mention quite a number of things there, Coach Blooming, which I am in agreement with. Number one, I think for me, my strategy is that I did some shopping today. I added a little bit more on my long-term position for the exchange traded funds that track the S&P 500. And again, this is a long-term play. I'm looking into 10, 15, 20 years from
Yep.
now. So this is actually for me a wonderful opportunity. But again, this is important to stress that for me, we have an emergence fund and we
Mhm.
are not looking to use that money anytime in the short term that I'm dollar costing averaging. And I also had quite a bit of cash, about 50% of the portfolio was actually in cash, which I was using to trade. But right now, there's a lot of volatility, and I'm actually building other trading strategies, also using options like covered calls, like you said, Coach. Now, I do want to just emphasize that the reason why I think, because as long as President Trump is talking about the tariffs, the impact of tariffs is very, very broad. I think it's very, very important because in economics, we use what we call the policy analysis matrix. Basically, you have to look at different stakeholders. If you just look at one way, because there are always winners and losers. So these tariffs, I was listening to President Trump, he was indicating that he is considering putting levying tariffs on Canada, reciprocal tariffs today, Monday or Tuesday, which to me, I find it that maybe his strategy is to cause the Canadian economy to drop. So what that means is in the Toronto Stock Exchange in Canada, there might be other companies that might be, dropping in the equities market. Basically, what that is happening, what that is causing is that a lot of business leaders might be wondering what shall we do? Should we make those big financial decisions, capital expenditure? So therefore, on the short term, I see these companies like dropping, right? Even though they may be fundamentally strong. So my strategy is on individual companies is I am strictly looking for businesses with solid financial positions, wonderful leadership with traceable leadership roles, and also that I understand the business model and business valuation. I'm not just jumping into any business because what might happen is that this might be prolonged and a lot of people lose money because some companies might file for bankrupt. But if they have cash, working capital, free cash flows, zero to low debt, whether in the US and in Canada. Those are the kind of stocks that I am considering only if they are discounted 40, 50% according to my valuation. And I usually like to just go and see what are the analysts kind of like predicting. Again, nobody can really predict the direction of the stock market in the short term. Things can happen anytime, but it's kind of like basing on some model to say with this cash flow, this is what the value could be. So tariffs, they are something that are happening. What's your take on that? But in simple terms, they just are going to cause an increase in the prices of, like in the case there are a lot of you know, noise about the egg prices in the US, right? So it affects the domestic market mostly in terms of the prices, right? So that's the argument on tariffs. But also means the exporting country, in this case, their current might also devalue. That means their exports might be cheaper. But at an individual level, tariffs, if they are levied, let's say by Canada, it increases generally the prices of the prices. So consumers will likely pay a higher price. Coach, what's your take on that?
So my take on tariff, especially the one by 47, is just if we look at it on a bigger picture,
Mm-hmm.
why is he doing this? Is this really going to be a long-term strategy? Or this is more of a short-term strategy as a negotiation tactic? To me, I tend to lean more towards the latter because I believe that this cabinet is pro-business,
Mm-hmm.
pro economy, meaning that they want to put policies in place that are going to strengthen the US economy. And if you just levy tariff across the board, it's not good for the US economy in the long
Good,
run.
good. Get on.
So,
Yes.
like, and if you know that this is not going to be a sustainable tactic, why would you want to do it? You're doing it because you want to have the upper hand when you're bargaining. Yesterday, oh, tariff is in place. Today, it's no longer in place. What exactly are you doing? So those are some of the nuances that I tend to pay attention to that, hey, yes, you might tell me that you're going to put 25% tariff on this, but how long is that going to be in place for? About a month ago, we said the same thing that, hey, tariff is going to come into effect. Then the next time you say, okay, we're going to delay for 1 month. Then it's over a month now, then you come back, okay, we're going to put this, then we're going to remove it.
Now he's talking
Again,
of April 2nd.
yeah,
So for me,
April
I'm just
2nd.
looking beyond the 4 years for Trump because it might be a cycle where he says he's going to put tariffs and then reverses it. And again, in my view, it might be a business strategy, is a strategy for him. But in the real sense, the stock market is voting basically saying that we don't like this, we don't like this because it's dropping and dropping and dropping and causing this volatility. Again, the idea is most likely maybe to protect domestic industries, to build their factories. But I was, looking and researching, it usually takes maybe an average of 4 years to build a plant for, car manufacturing, for example, like the ones in Ontario. Let's say if they are to build in the US, right? So there's a time lag. By that time, that might be sometime.
Them playing here.
So, I mean, we want to move on to other things, but I just wanted to highlight that for me, my investment strategy, investing, it's a long-term strategy. This is a wonderful opportunity because if the NASDAQ dropped by 10%, it's a correction. I think the valuations in the US equities market were unsustainable. You see companies like Tesla, they've wiped out most of the gains that they go, that had occurred post President Trump's election. But companies like Apple, they are still standing. I think also because it wasn't playing big on the AI strategy. So that seems to be paying off. Again, when it comes to individual companies, I like to really understand the companies that I'm investing. Again, this is not investment advice. Coach, can you comment on that before we move on to maybe talk about other income generating strategies that we have been using?
So, in terms of the tariff, again, the market doesn't like uncertainties, and we're seeing that play out in the stock market. But
Mhm.
again, when you zoom out, you tend to see the bigger picture. And for me personally, I'm looking at the bigger picture. Why are you doing this? Because once you understand the why, then you'll be able to position yourself strategically. Again, I don't see the tariff as a long-term thing. It's more of a short-term negotiation tactic to just give the US a higher bargaining chip on the table. But irrespective of that, because there's so much uncertainty in the market, obviously investors don't like that. But in the grand
They are
scheme of
going to
things,
China.
yeah, if I see that, number one, the interest rate will be coming down. Oh, the bonds rate is coming down. That is going to fit into mortgage, into credit card. If and when the US is going to refinance its debt, it's going to be at a much lower rate. So if you're looking at all of these things, it's playing out that hey, I'm a businessman and I want to make sure that when I'm doing things, I want to get the best deal. And this is what I think is going on. So if I understand the big picture and I'm like, hey, stocks are going down. There's a lot of fear in the market. Be greedy when the market is fearful and be fearful when the market is greedy. We're looking at the fear and greed index is in the extreme fear. So as a
Yes.
student of the market, historically, this has been the most perfect time to just buy because why? The market cannot stay in this uncertainty for too long. It's going to eventually recover. Remember in 2022, no, I think in 2021, when the market was at all-time highs, then we were going into 2022 when the Fed started increasing interest rate. This is
Oh
a
boy.
different
Yeah.
cycle when the Fed is cutting interest rate. So if I know that, hey, this is very bullish for the market, the short-term uncertainty is just for the time being, I will just be buying. So again, tariff, we don't know the full implication, but I tend to zoom out or understand the bigger picture. And once I understand the bigger picture, I can position myself strategically in the market by just DCAing into fundamentally strong companies. So that's my take on this. And I truly hope that these people, the cabinet in the US, they tend to know what they're doing, even though sometimes I have the impression that hey, you're coming with a sledgehammer and you're ruining the stock market. But the big picture, I'll be buying is just a great opportunity. So
Yes, and I saw what you mentioned, Coach. That was Secretary of Treasury, I think
this
Besant,
time, yeah,
Besant,
Bison.
and his point is like he wants to a situation where the Treasury yield, the Treasury yields they drop, and that's what's happening, right? So that there's a strategy in this. It's usually, I think, in this case, like you said, the mortgage loans and interest rates they will drop. Now, I
There's
saw
a method to the madness. There's a
the
method to this
there
madness going on.
is, yes, and this is causing a lot of volatility. Now, that brings us to the next level because now for me, I am a retail trader and also a retail investor. That's what I do for full time, and we create content like you, Coach, Blooming. I have to survive. I have to have some money. And I saw that you posted that you are making at least 5,000 US dollars in month passive income. Did you want to explain a little bit more about covered calls or some strategies that you are using? Because for me, I also trade occasionally, right? So did you want to share that?
So so when we look at what is going on in the market, there's a lot of uncertainty. And for now, I'm not even checking my portfolio because I don't know. I don't want to know how far or how much my portfolio has gone down because why? It just put a lot of pressure on me, and I tend not to do that. But a way to just get a cushion in this volatile market will be to get some cash. And how am I doing that? I'm just selling covered calls on the same stock that I already own. These are the same stock that I plan on holding for the next 5, 10, 15, 20 years, God helping. But the thing with covered calls is that you have to have at least 100 shares, meaning
Mhm.
that you have batches of 100, maybe 100, 200,
Mhm.
1,000, 10,000, just batches of 100. And if you have that, you can sell a covered call on that. And when you sell the option, you're going to get a premium instantly,
Yes.
especially now that the market is going down. This is just a cushion, just a way to get us extra cash flow in the market without having to do anything extra. You already own the underlying asset. Why don't you just milk some more money out of
Mhm.
the same asset? So that is
Yeah.
what I'm just doing, selling covered calls. And this is I mean, once you understand the dynamics of this thing, it's a no-brainer because I'm just like, hey, I've been investing for the past 4 years plus. Why don't you just do the same thing? Selling covered calls, especially in this volatile market, is just a simple and a good way to just generate passive income in the market, despite the fact that there's so much volatility in the market. So for me personally, when I started selling covered calls, I think the first one was about 1750. Then I did another one about maybe less than 10 days later, sold another cohort call, meaning that I rolled the previous one that I got a new premium about 3,800. I think in the next few days, I'll do the same thing again, get another premium. So depending on how long you want to do this for,
Coach,
some do this every week,
coach.
some do this weekly or monthly or bi-weekly. So
So,
yeah.
I wanted to simplify this, and I'm going to ask some follow-up questions there. But for those who don't
Yes.
understand covered calls, like you said, Coach Blooming, you should have, at least 100 shares, right? So you open the position by one contract has 100 is equivalent
100.
to 100 shares. So what you do is when you go to the options, right? You have to understand some technicals, some resistance levels, some demand zone and some supply zone. And Coach Blooming and I, that's what we do. If you want to learn more about that, feel free to reach out to any one of us. So what you then do is you open a position by selling an option.
The
And by
option.
so doing, you get the premium. And then if you want to close the position, you close by buying back that
Buying
option,
back.
right? So when
Mm-hmm.
you sell the option at that strike price for that time frame that you want, maybe it's a week or 2 weeks, right? Now you get the premium, right? And if, for example, let's say you have a Palantir right now, it's trading at $83.80. And if you are aggressive, you can go maybe for, let's say you get 200 premium for the options that expire on Monday, right? And your strike price would be, let's say, $84, right? So you
Mm-hmm.
get the premium, but if then Palantir on Monday, it closes the day above $84, that those shares might be called away. But still, you got the premium. If you got it maybe at $80, you would have made that profit, the difference between $80 to $84 plus the
Mm-hmm.
premium. Now,
Yep.
if now Palantir drops to 80, what that means is that you can still make money again because you can roll out the option again, let's say maybe to 2 weeks, because now, because of that drop, you can possibly catch out as the difference between that lower premium, you subtract it from the higher premium. So it's a very interesting strategy. But at the end of the day, you really need to understand this. Coach Blooming and I, we spend time understanding this, and that's what we do for clients who they sometimes come to us for strategies. But again, this is not investment advice. You really have to understand what you are doing. Now, you also mentioned it's very important, I think, to be clear that let's say if you are playing Palantir, if it's going for $83.40, it means you have to have 8,000 for $8,340 to be able to buy those shares, right? So you need a bit of capital. And then if you can then continue doing this, but ultimately I want to do these covered calls on stocks that I ultimately want to own on the long term. I don't just do it on any other stock. And
Yeah.
there are quite a number of option strategies, but again, there are bullish strategies, bearish strategies, and also the ones that depend on volatility. But at the end of the day, right now, I think the sentiment for SPY, for example, over the next 1 month is bearish. So I would be inclined to kind of like do strategies that align with that. Coach, did you want to comment before we move on to the next item on economic data?
Yeah, so just to wrap up in terms of selling covered calls, one of the easier way, you can go on my YouTube channel. I've done some
Yes.
videos on how I roll forward my covered calls, how I generate a premium. I
Sure.
mean, it's just a short video for you to understand. But again, despite the volatility in the market, you can still make cash flow in the market by just selling covered calls. But for simplicity, you need at least 100 shares or batches of 100. And if you understand that and you can sell a covered call against that, it's just extra money that you don't need to do anything for. And again, do this for fundamentally strong companies that you believe long term. So, yeah.
Yes, that's very interesting. Now, one of the other things that I like to consider when I'm investing, but also mostly when I'm trading, is the economic data. This week, there was a lot of economic data, including the GDP that came out. I think it was 4%, right? But um, when I'm looking at trading, those data drops might actually cause market volatility. Next week, there's going to be a lot of economic data, but I just want to quickly show you what came out of the economic data, well, mostly this.
Okay.
So you can see the economic data, like I indicated. I think the most important thing here is to just look at the long-term trend. But right now, the US economy is robust, it's strong, because if I look at the data that was dropped today, GDP was unemployment actually was 4.1%. I meant to say GDP 4.1, and it was forecasted at 4.0. It means it was higher than expected. I think with what is happening with Dodge and uncertainty in the market, it makes sense that the unemployment is ticking higher. The gold standard is to keep it at, 4% unemployment, right? But also 2% in terms of inflation. So that's the mandate of the Fed. In this case, you see that the non-farm employment that you mentioned, the change, there was a lot of unexpected numbers, 77,000 versus 141,000. So it means in terms of non-farm employment change, there were less people who actually were employed than expected. Now, the services sector, it expanded. The non-manufacturing sector, it expanded. Any number above 50.0, it means that there's expansion. Now, this is very interesting. So next week, there's going to be core inflation data, and these are the data points that are going to be there. Now, I say this to just mention that, like Coach Blooming mentioned the other time, I like to look at the long term, right? Data points, let's say 6 months, 6 weeks, moving average. But at the end of the day, the economy is still resilient in the US. And I'm using this data to trade because each time this data is dropped, sometimes the market goes up and goes down, thus creating opportunities. So, Coach, what's your comment on this economic data?
I mean, there'll always be economic data every month, every quarter,
Week.
but just for simplicity, especially for beginners to enter the market, if you just stay consistent and this year into fundamentally strong companies, whether unemployment is going up or businesses are not doing well or people are losing their jobs, so unemployment rate is going up or J Powell talks, in the grand scheme of things, this will always happen. Because sometimes when we look into the data, we tend to get
Mhm.
lost in it. But if you just zoom out and say, hey, why am I participating in the market? Do I just want to earn some cash flow for the short term? Or I'm investing so that for the next 5, 10, 15, 20 years, I'm good. And me, I tend to lean more on the latter, meaning that I just invest so that over the next few years, again, things are good financially. And I think that for most of us, I just feel like the US market is one of the best ways to just build wealth. If you
Mhm.
understand what you're doing, you look at the stock market, you could also invest in crypto, provided you know what you're doing. This week we had the announcement of the strategic Bitcoin reserve, not even just Bitcoin reserve, the strategic crypto reserve. We heard that Bitcoin is going to be involved, Bitcoin, Ethereum, Solana, XRP, Cardano, and some other cryptocurrencies. In the grand scheme of things, I tend to study what the ultra wealthy are doing, and if they are going into an asset class, it's giving me some cue that, hey, I need to build some wealth into this, and that's what I'm just doing. So again, in terms of the economic data, for the short term, yes, it's going to affect the market because anytime J Power talks or we have some data on
The
CPI,
market sneezes.
yes, we just panic. Investors panic.
Human
But I
behavior.
tend to yeah, so but I tend to look at the oracle of Lamar and he says, be greedy when the market is fearful and be fearful when the market is greedy. And he's sitting on a lot of cash. So this man is expecting some volatility in the market. So for me, I'm just using cover call strategy to generate
Yeah,
some cash flow and I keep DCing into
in the
fundamentally
interim.
strong
Mhm.
companies. Yeah, so
You
that's
mentioned,
just my take on that. Yeah.
yes, you mentioned Warren Buffett. I admire him a lot. And I think there are two theories why his cash position is probably high. I think closer to 40% of the overall portfolio of Berkshire Hathaway, which is, I think, close to 1 trillion. Now, um, in terms of asset under management, I think the issue is they say probably he's liquidating most of the stocks because he wants to pass on to the successor because he's now old. So he wants the successor to have a clean slate. But also I've seen that having cash on your balance sheet or in your account or brokerage account, if you're investing, is an advantage if there is a huge drop like what is happening. Because the problem is a lot of people now, they are like, the market is going down 10%, maybe it's going to be a bear market that is at least 20% drop. But if you don't have money that is on the side, you are not going to be able to make money by buying wonderful companies or wonderful securities that are likely to appreciate over the medium to long term. So it's a brilliant strategy that I actually learned from Warren Buffett. Like, it's basically teaching us, if you want to be successful, you should be in a position where you have cash to deploy and to allocate. Now, Coach, you mentioned the issue of Bitcoin, which dropped, I think, below $90 this week, which is, I'm not participating in Bitcoin. Right now, I'm kind of like on the sidelines and mostly big on equities. But you mentioned that there was the strategic
Crypto reserve.
reserve, and David Sachs also, I think there's the summit on
Yeah, today.
Bitcoin, on crypto at the White House. And
Yes.
I was reading Krugman, and he was saying his view, Paul Krugman is a Nobel laureate. One of the things that he mentioned is like President Trump is actually, that's his words, not mine, is actually participating in the biggest haste, according to him, because his view is that if they are going to create that strategic reserve based on the forfeited money from fraudulent people and stuff like that. So it's not going to be taxpayers' money. So that's going to show up the strategic reserve, right? But his view is that maybe if there are some people who are insiders who know what's really happening and there's no proof to confirm this, if they are shorting on the other market, because one thing that I understand is that if the market goes up or down, the other person on the other trade makes money and the other person loses money, right? So if some people are right, in that case, they shorted Ethereum, they shorted Bitcoin, it means they are making money. But I mean, I can also do that if I'm confident. So that's the beauty about, having access to this. So what's your take on that, what's happening in the crypto? Again, I know you said you are looking at the long term. It's very volatile. So Krugman was saying it's a very volatile asset. But I think for me, I'm not American, I'm Canadian and also Zimbabwean. So I just tend to see the show going, but I trade and invest in the US. So that's why I have a keen interest in the market there.
So yeah, so Bitcoin went as low as $80,000 this week. It could dip lower. I made a remark last week that Tom Lee, one of the top leading people that I listen to in the finance space, said that, oh, Bitcoin can go as low as $60,000 before going to 250. Again, we're seeing that, hey, today, March 7, the crypto summit in the White House, and a lot of top leaders in the crypto space are going to be meeting with President Trump. I was listening to David Sachs today. And again, one of the things that I'm seeing across the board is that, hey, they want to position the US as the leader in AI and crypto. This is still a new technology. And when things are new, that is when you need to still position yourself strategically into it because it's still in the discovery phase. A lot of people would just want to come into Bitcoin when Bitcoin is at 180,000, 200,000, 250,000. And I'm saying that, hey, if you have the understanding of the market, if you understand what you're doing, if you want to play in this long term, then I will allocate some of our wealth into this. There's a lot of uncertainty going on in the market. I think when President Trump made the announcement that, hey, the crypto strategic reserve, and he mentioned about 5 coins, Bitcoin, Ethereum, Cardano, XRP, and Solana, there was somebody that took a long, meaning that the person literally leveraged and was betting that it took I think a leverage of up to $200 million.
Yes.
Again, when people do this, maybe they have some insider
And what
information.
happened? That person is still
I don't know.
holding that position?
I don't know if the person is still holding the position or if the person has already exited it. I tend not to lean more towards using leverage,
Yeah.
but I'm just saying that in the grand scheme of things, this is a game of numbers. There's always going to be winners and losers. But for me, if I want to win long term, then I'll position myself long term, meaning that I won't just trade in and out of crypto because crypto is very volatile. Bitcoin is volatile. But irrespective of the volatility, I see this. I think I was listening to Kathy Wood, very controversial. A lot of people don't might not believe that, but she was saying that in the 2030s, one Bitcoin can go as high as $1 million. I was
What is
listening
the
to
best
Larry.
basis for that, coach? Because a lot of
I
people
was
they make predictions.
I was listening to Larry Fink. He said the same thing.
Mhm.
Bitcoin can go as high as $710. Why? When there's a fixed supply and there is
Mhm.
an increase in demand. As a student of the market, basic economics, you just know that if the supply is fixed and more people are coming for the same quantity of item, the price is going to go up gradually. It's going to go up. So when I see this, that hey, a lot of people, a lot of nations, a lot of individuals, a lot of hedge funds, a lot of institutions are not yet in crypto. And if they are not yet in crypto, and we're going to be having policies in place, clarity on what digital asset, clarity on digital asset, how exactly are we going to allocate our wealth into this? I feel like things are lining up in Bitcoin's favor, in crypto's favor. So again, a lot of people are making predictions, but I tend to look at people that are managing money. Larry Fink is one, Tom Lee is one, Pack Invest is one. These are controversial topics, but again, MicroStrategy is another one. We can see President Bukele. Again, these are bets that they are taking on Bitcoin. Yes, very controversial in the short term, but if you believe that in the next 5, 10, 15 years, you'll be happy that you bought Bitcoin at 80,000 or 100,000, I would do
Yeah.
it. But
Yeah.
that's just me. I'm not saying that this is what you should do. I'm just saying that when you study the ultra wealthy and you
Mhm.
copy what they're doing, not just what they're saying, what they're doing, because why they consider the ultra wealthy is because they understand this money game. And if we're still learning about this money game and you see somebody that is already successful playing the game, I will learn and copy and listen to how they are even doing their own investment strategies. So that's my own take on crypto. That's my take on Bitcoin. It's volatile, but despite the volatility, Bitcoin last year was in the 40s. Today is in the 80s, and we're complaining in the 80s. Maybe next year we're going to complain that this is just 120K. I don't know, but that's just my own personal strategy in this.
Yes.
Obviously, I have my own stake in Bitcoin, Ethereum, Cardano, Solana, and things like that, and some meme coins too. But don't copy what I'm doing because, hey, why should you listen to me? I'm just a random person on the internet. So, but that's just what I'm doing personally. I like to take
Yes.
the risk, but I believe in Bitcoin. I believe in the long-term thesis of this digital asset. And hey, if you believe in it, play in it. It's a game.
Yes, and again, we always say this is not investment advice, but that's what we are doing. That's how we are positioning ourselves in terms of building wealth. And we also spend quite a lot of time reading. That's what we do full time, understanding what's really going on in the market. Is there anything else, Coach, that you wanna share about? I think I wanted to also mention that AVGO, they beat earnings and it was up 4% today. Avgo is
Mm-hmm.
a Broadcom. It's a very
Yeah,
big and
Broco.
interesting business. And I think it kind of like helped lift the spirit in the market a little bit
Little
when I
bit.
saw that they beat earnings on Thursday. That was yesterday. I was kind of like, maybe tomorrow the market is gonna be great. Is there anything else that you want to share, Coach, before we go? But a question that I tend to, and I'm going to say this, I saw some people were commenting on my YouTube channel and they were saying, oh, I want to trade. This person who says you're guaranteed to make money. I want to make it clear, especially on this channel. Once I hear people who say they are guaranteed, there's guaranteed money that you can make in trading. Most likely those people, they are scammers or they don't know what they are doing, unless maybe you're talking of fixed income instruments, like let's say treasury bills or something. But trading comes with risks, investing comes with risks. We have always been clear about this. Why? Because at the end of the day, things might change in the market, right? And the market might drop. So if you have the opposite of the trade and the trade goes the other way, you are likely to lose money. So a lot of people, they want to come and make money quickly. At least in my experience, I play the long-term game. If I'm trading, I manage my risk, and sometimes it's not easy, right? So I just wanted to make it clear because I saw some people, maybe they were scammers who just came on my LinkedIn, my YouTube channel.
Yeah, so there will always be people that want to make fast money, but
Yes.
if you're in crypto or you are in the stock market to make fast money, you're gonna lose literally all of your money. Because why? Investing is a long-term game, something that you play for the long term. And the moment you're anxious to make fast money, even the little money you have, you're gonna lose it. The
Most
best
likely,
time
yeah.
to, yes, like before we even invest, it's important to learn. That knowledge is your weapon to win and succeed in the market. A lot of people, or should I just say, many people come into the market without understanding what they are doing. And if you don't understand what you're doing, you're going to lose the money that you have. I always like to emphasize the need to go for knowledge, pay for knowledge. That wisdom is going to save you tons of money down the line. I'm talking about the cover call strategy because why? I've spent some time understanding it, and now I'm like, okay, maybe I can make 5 grand. Not even in a month. Now I'm looking at this maybe every 6 days, every 10 days, because why? Once you understand this money game and you get the knowledge,
And that's a
you're
lot
going
of
to
money,
win.
though. That's a lot of money.
Yeah,
Yeah.
you're gonna win. So when people come to either your page and say, hey, you can quickly make $10,000
Yeah.
in 1 week, and I'm like, okay, why would I even give you this money to get me the $10,000 when I can learn?
And
Pay
the
for that
question is
knowledge.
how, I mean, I haven't seen, there are no guarantees unless you have insider information, probably. But still, the market makers can possibly move the market in whatever direction. There might be some news. So over the long term, investing for me, investing in wonderful companies, in things that I understand has been kind of lower risk in that sense, if you just hold up for the long haul. But it's very possible to lose money. I've lost money in the market as well. Fortunately, I have made more money than I've lost, right? But it has been a compounding effect of learning, dedicating myself to learning, sometimes accepting the losses, the mistakes that I've made, and moving on, and not fighting against the market trend. So that's something that I'm learning at the end of the day. So I just wanted to put it out there loud and clear. And Coach, anything
If
else?
if somebody is coming to your comments and say, hey, I can make you $10,000,
I
the
ran
person
away with my
have
wallet.
no job. The person has because they have the time to even come to your comment and leave that comment and leave somebody else's details in there. I'm telling you, it's a no-brainer. You shouldn't even think about it because why would somebody find the time to come under your video and leave a comment if it's truly working for them? That is time that they are wasting just leaving that comment there again. But for
Yeah.
people that don't understand the market, you go read the comment and you fall for that trap.
Yeah,
It's
there are scammers out
I don't
there,
know.
so be
It's
careful.
it's it's your own, yeah, it's just your own call, it's your own decision. But hey, you can learn about this thing. Investing is not rocket science. You can learn this thing. Anybody can learn how to invest successfully in the market. So as always, may the market be in your favor.
We will see you in the next episode. Thank you so much for supporting us. Make sure you like, you click, and share this video so that we have, this video goes viral. Thank you, and bye-bye for now.